The iconic American car company, GM, is in the midst of a dramatic transformation.
We really feel General Motors has moved from being an automaker to really a platform innovator.
The shift comes with ambitious goals to sell 1 million electric vehicles in the United States and China by the middle of this decade, and to phase out production of all gas-powered cars and trucks by 2035. With EV penetration still in single digits, it's a bold bet on the future of mobility.
The shift to electrification and ultimately autonomous vehicles is probably the most transformative thing that's happened in the auto industry, maybe since Henry Ford's assembly line. It's monumental.
We've got an industry that's really stayed about the same for about 50 years. The thing that's different now is we've got a confluence of what we call CASE, so connected, autonomous, shared, and electric, that are really new things in a quantum way to the industry.
GM plans to put $35 billion behind its push into electric and autonomous vehicles by the year 2025. That's where CFO Paul Jacobson comes in.
I see the role of finance as really being twofold. Number one is making sure that we're supplying the information on how we think those decisions and that transformation are going to project out financially. And then number two is make sure that we get the right resources in the right place at the right time, which can be challenging with so many different directions and so many opportunities ahead of us.
He's been a great partner with what we're doing. This is not a substitution business that we're in the short term and long term, but rather an additive business.
It's a company that's focused on tech. It's a company that's focused on revenue diversification. And with that, there's a lot of margin expansion up ahead. You got to be optimistic about the future and making sure that we're allocating capital into the right places to fund the transformation.
For 90 consecutive years, General Motors sold more vehicles in the United States than any other manufacturer. That streak ended in 2021 when Japanese rival Toyota took the crown. GM still recorded record profits in Paul Jacobson's first full year as CFO, and that's a good financial foundation for the task ahead.
If you have a dashboard that you look at as CFO, and you're looking at the EV transformation right now, what's green, what's yellow, and are there any reds on that dashboard?
Well, I think we live in a world that seems to be red for everybody right now, and that's been one of the challenges. I mean, since I arrived here a year and a half ago, it's really been about the semiconductor challenges, the macroeconomic challenges, supply chain, et cetera. But all of that is just part of transformation, right? Not everything goes according to plan, and you just got to make sure that you set your sights on the horizon and make sure that we continue to track to it. And I think the team's doing an extraordinary job. There is a lot of uncertainty out there, and that's one of the things we have to manage. We're blessed with a tremendous balance sheet. The team's done an amazing job funding the pension, paying down debt, et cetera, which puts us in a position where I don't actually have an aversion to using the balance sheet to continue on our path if we need to temporarily.
Chip shortages and supply chain disruptions have driven global car sales volumes down from their 2018 peak. But it may have long-term benefits, forcing companies like GM to tear down silos and bring teams together to find solutions.
We actually, as a management team, all the senior leaders of the company get together once a week, and we've been doing that for a year and a half to talk about here's what the forecast is, here's what we're going to do to mitigate it, and here's how we're going to respond. And it's been one of the most amazing examples of collaboration I've ever seen in my career.
No longer do you have to look to different functional leads or vice presidents that would lead product development or design or sales or marketing or whatever that is. You know, it's really everybody's together. Our staff meetings are together. It's very, very, very much one team, and that's changed everything.
We've already talked about how we are simplifying the chip structure and going to 3 chip families. That's going to put us in a position where we're not as beholden to hundreds and hundreds of chips, depending on which vehicle, where any one of them might hinder production. So lots of things across the horizons that we're doing to make sure that this becomes much, much easier to navigate in the future.
The transition to electric vehicles will bring a fresh set of challenges. Global demand for metals used in batteries is already putting pressure on supply chains and driving costs higher.
Well, right now, commodities prices for those commodities that are like lithium, like cobalt, that are used in EV batteries have soared. Those materials also not are just expensive, they're generally in places that have geopolitical issues.
How do you address the raw materials issues, particularly things like lithium, things like nickel? There's going to be a shortage of. How do you make sure you have that at a price you can afford so you don't have a rapid spike up in the price?
We're really looking at a multifaceted approach, anything from traditional supply chain procurement type functions all the way to joint ventures or longer term contracts. It's not about capturing the best price today, it's about capturing that consistency of the business model that we can plan around and anticipate going forward to make it easier to fund this transformation.
But while Jacobson takes steps to head off headaches, he's also aware that GM's electric future holds huge opportunities.
I think the most exciting thing about the EV transformation is it's fundamentally going to change the way we make money at General Motors. Because if you think about it, the overwhelming majority of our profits come from the time that we sell a vehicle to a dealer, right? And that vehicle enjoys a lot of revenue for very different companies over the life of it on the road. What the electric vehicle and what connected vehicles are going to do for us is increase the revenue opportunities for us over the life of that vehicle. Second owner, third owner, fourth owner, because we're going to be able to offer ways through over-the-air updates to customize it, subscriptions, various services, insurance packages, lots of different ways that we can interact with the customer in ways that historically we haven't been able to.
How much of your top line, your total revenue, is going to come from selling vehicles as opposed to the services that you've just been describing?
So if you go back to our investor day last year, we talked about doubling our revenues while expanding our margins by 2030. The doubling of the revenues are coming both from growth in auto sales, because there's a big overlap and we're getting new customers every day on electric vehicles, the ones that we're taking reservations and orders for right now. So what we talked about is $20 to $25 billion a year of revenue in 2030 around these services that we can provide going forward. So it's a massive growth off of what we've currently experienced with OnStar historically, and really excited about what that's going to bring.
GM also expects significant growth to come from Cruise. It owns 80% of this startup that's developing autonomous vehicles. Despite considerable investment in advanced technology, the company has resisted the temptation to spin off these units so far.
Is there a world, can you envision as the chief financial officer, a world in which you say, you know what, there's an old business, there's a new business, we should trade separately?
Well, there's a lot of commonalities between the businesses, right? So about 70–80% of the vehicles are the same, right? They both need brakes, they need windows, they need features inside the vehicle, seats, et cetera. So everything that we can do to make the ICE vehicles more efficient and more appealing to the customer is only going to help us with our EV transformation. And that's why that integrated approach is so critically important to help fund that journey for us going forward.
Investors have indicated that they're along for the journey as well. Since July 2020, shares of North American automakers have significantly outperformed the S&P 500, even after broader economic and geopolitical turmoil dragged them down from their peak.
The last 2 years, they have doubled their commitment to what they're going to spend in electrification across the industry. And a lot of that has been rewarded by Wall Street. The companies will now need to deliver on, or be prepared to deliver on that in a post-supply chain constrained world.
Part of your job is to make sure that Wall Street is getting the message that you want them to have about General Motors. Where are you in that right now? Where is General Motors in the perception on Wall Street of the extent to which it really is a tech company on the forefront?
You know, I think the challenge with what we did is we put out 10-year goals. That's something that was kind of unheard of in the industry as well as here at GM. And now what we've got to do, the next phase, is make sure that we're giving a roadmap to investors out there to say, here's what you can expect to see in the next 2 to 3 years. And as you see that, you should increase your confidence that we're on the journey to get where we need to be in 2030.
The Wall Street perception of this changes almost weekly or monthly, which is fine. Our goal is nothing more than execution at this point. As we produce and execute, the confidence will grow. Nothing is going to take us off track from that execution. We know we have the right strategy, so that will come.
This is about the long term. We're not running the company for the stock price today. We're running the company for value creation over the long term, and I feel like we've got a really, really good hand to play.
Coming up, Paul Jacobson tells me what he's learned about GM's electric future from driving the brand new Hummer EV.
It's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles? And then number two, where do we need to focus on addressing some of those anxious points for people?
And we visit the lab where today's investments are developing tomorrow's batteries.
It's one thing to look at chemistry and say, this is superior, but can you replicate it millions and millions of times across the entire portfolio?
This is Bloomberg. General Motors CEO Mary Barra and President Mark Reuss are not only auto industry veterans, they're second-generation GM employees, following fathers who both worked at the company. Paul Jacobson's new to the car business. He launched his professional career at Delta Airlines, including 7 years as CFO before joining GM in December of 2020.
I started with Delta back in 1997 as a financial analyst out of business school, and just had an incredibly blessed career there to be able to see and do so much, and got to be treasurer through the bankruptcy, which as a corporate finance person, bankruptcy is the best experience you never hope to repeat. But it gave me a really good platform in how to make deals and how to think strategically across the board.
Mark Reuss appreciates what Jacobson brings to the mix.
Whether it's in the airlines or the auto business, focusing on the customer and being best at satisfying our customers, whether it be design, whether it be the actual vehicle and the entry itself, the experience in buying, the experience at the dealer, whatever that is, committing resources to those places to grow that top line is what it's all about. And he's proven to be a perfect partner for that.
At Delta, we're a company that is 100% focused on customer service, and I had the opportunity to learn from Richard Anderson and Ed Bastian on the finer arts of leadership and transformation through a company that went through a lot. Here it's very, very different. Working for a manufacturing company is amazing. I tell my wife all the time, it's amazing to be around people who build things.
GM's transition to an all-electric future is built on a proprietary battery pack called Ultium. It's building 4 factories to produce the batteries, while it retools 4 existing assembly plants to ramp up EV production. The objective, to create a scalable platform that eventually drives down costs. Paul Jacobson took me to the laboratory where this technology is taking shape.
So we're in the heart of one of our battery testing labs where we test all aspects of the battery resiliency, extreme temperatures, shaking, vibration, etc.
How much are you investing in R&D for the battery at this point?
So we are investing a ton into battery technology, but it's not all just us. So around us, we've got the testing facilities. We're also building a new cell manufacturing test facility where we're going to test different ways of manufacturing cells. Because it's one thing to look at chemistry and say, this is superior, but can you replicate it millions and millions of times across the entire portfolio? So we're in execution mode. We're producing cells now at Lordstown, and we'll be rolling those out soon. We're already have these cells in the Hummer EV and the Cadillac Lyriq as well. But as far as technology and chemistry goes, I think we're just at kind of the beginning of where that might go over the long term. Do we go to solid state or what? So we're looking really at a portfolio approach to make sure we capture the highest probability of being successful.
So as you go to scale, and you have those millions and millions of time, the vehicle comes off the line, whatever that is in the future, right? 10 years down the road, what percentage of the cost of the vehicle will be just tied up in a battery like that?
Well, the battery and the motor systems are sort of the equivalent of the engine and the transmission today. It is costing more, obviously, for those systems going forward, but we think that technology is going to come down over time as well, which is why we've said we think we can get an electric vehicle to parity, profit parity, if you will, by the end of the decade with their ICE counterparts.
EVs may also be more profitable on the labor side, at least in the manufacturing phase.
If you just looked at the powertrain of the vehicle, the parts that are different in an ICE versus a BEV, there's 40% less labor hours in the assembly of a BEV powertrain. So fundamentally, there's 40% less labor needed.
But certain engineering skills are likely to command a premium.
We're seeing auto companies on the engineering side out in the marketplace competing for engineers that they're competing with video game companies, Silicon Valley companies. A different kind of engineer, software engineers are, really needed. And so there's this big competition for that kind of employee and attracting them to the auto industry, which is considered, an old Rust Belt industry.
We've been hiring really aggressively over the last couple of years in software, in chemistry, in just broad engineering across the board. And what we found is people are attracted to coming to General Motors. I think more and more today, employees are focused on, I want to work for a company that shares my values. And when you look at what GM is doing in our pivot to electric vehicles, we find a lot of people want to be a part of that.
U.S. car buyers are also getting with the program. Sales of fully electric vehicles grew by 85% from 2020 to 2021, with Tesla accounting for 3 of the 5 top-selling models. Yet hurdles remain, and the issue of charging might be the biggest.
If you think of the reasons why people avoid an electric vehicle now, 4 of the top 5 reasons are related to charging.
U.S. charging infrastructure is steadily improving, but consumers still worry about being stranded without power on road trips. Paul Jacobson assured me that when he takes the new Hummer EV on long journeys, it's not just fun to drive, it's equipped to go the distance.
I hear so much about road trip anxiety that I wanted to experience it myself. My family likes to drive a lot, so I brought my daughter home from college in this, and it was great. I mean, the computer system is all intuitive. It tells you how to keep track of the battery. It tells you where the charging stations are. It tells you how much power you'll have when you get to the charging station. So it really puts a lot of your anxiety at ease. But as far as driving it, it's a treat.
So where are you on the charging stations? I know General Motors has made an investment in one company. How are we doing in this country generally in getting charging stations in?
So I think this is an area where obviously we can continue to improve as a country and a society. We're doing our best. We've committed almost $1 billion to EV charging. So we've taken that and looked at home charging solutions, local community solutions, and road trip charging solutions. With my daughter, what we would end up doing is probably stopping, grabbing a bite to eat, plugging it into a charger, usually a high-speed charger, to get as much charge as we can, and being there for 20 to 30 minutes. Get us a lot of range, and by the time we've used that range, we're tired, ready to stop again, etc. So it was a really good experience for me, and it's taught me, number one, what are the concerns of the consumer that are ultimately going to drive our vehicles, and then number two, where do we need to focus on addressing some of those anxious points for people.
Up next, the battle for EV supremacy may be won or lost in China. Paul Jacobson thinks GM is ready to take up the challenge.
The world is competitive, right? And the world of electric vehicles is only going to get more competitive. It doesn't matter where you're operating in.
And he reflects on how the role of the CFO has changed over the years.
Today's CFO has to be much, much more than a bookkeeper. Has to be a strategic business partner at the table, helping to see around corners and helping to prepare the organization for what could happen.
This is Bloomberg. In 2021, despite COVID lockdowns and supply chain breakdowns, General Motors delivered nearly 3 million vehicles in China. And since China still tops the global market for electric vehicles, GM expects its foothold to be helpful as it introduces new EV models.
China's role, frankly, is a big role in big volume for us and all of our brands. And as the landscape changes really rapidly to EVs in China, we're ready. We've got great JV partners. We do own the brands in China. And so we've got, good brand representation in the design of the vehicle. And then also we've got the flexibility in something like our Ultium architecture for batteries and cells that is flexible enough to handle the requirements of a prismatic cell like CATL makes in China.
Is it a challenge because China has shown a predilection to sort of intervene in the commercial markets? They favor some companies over other companies. Is that a risk potentially for GM because you have some Chinese native companies, if I can put that way, like a BYD?
We believe we're in a good position. At the end of the day, the world is competitive, right? And the world of electric vehicles is only going to get more competitive. It doesn't matter where you're operating in. So we need to focus on the quality and the customer offerings that we have, regardless of which market we might be going to.
There's one thing everyone agrees on when it comes to selling vehicles in China. The future is extremely difficult to project.
China's been interesting because they had a goal for 2025 that's basically already achieved this year in terms of electric vehicle penetration. They've shifted incentives from being a consumer-based incentive to being a stick on the industry with trading and such. That's greatly favored the startups. And it's been harder for the traditional automakers, both domestic and the Western automakers or foreign automakers there, in terms of the subsidy and the stick and carrot regime on electric vehicles. So it very much depends quite a bit on the regulatory environment going forward in China as to what China looks like in 2030.
Paul Jacobson tends to view the future with a healthy blend of optimism and pragmatism. I asked him to look ahead at some big picture issues.
What over the next 10 years excites you the most about opportunities for General Motors?
I think the most exciting thing over the next 10 years is we don't know about all the opportunities to generate revenue and serve the customer. So I'm really excited about that.
Okay, what over the next 10 years makes you most nervous? I'm not sure if it keeps you up at night, but heads in that direction.
Yeah, I think the thing that keeps me up at night over the next 10 years is just thinking about the macro landscape. The world is just changing so rapidly. We have a lot of competitors coming at us, and we're going to meet those challenges, but we don't know what the world's going to throw at us, and we've got to make sure that we are very nimble.
We've talked a lot about the changes coming for General Motors. As you look at your job as CFO, how will that job have to change because of those changes in the move to EVs?
Well, I think as you think about any CFO, not just the move to EVs, but just the move to technology and the changing consumer, we've got to be nimble, we've got to be quick, and we've got to make sure that we're operating in as close to real time as we can. We don't have time to look back over what happened last year or last quarter. It's what happened last week, what happened yesterday, how's the business performing, and how do we get real-time information to the business leaders.
Over the time that you've been a CFO, what has changed the most for you? What skills have you had to develop?
Well, I think as all CFOs experience, you get much more ingrained into the strategic side of the business. Today's CFO has to be much more than a bookkeeper. Has to be a strategic business partner at the table, helping to see around corners and helping to prepare the organization for what could happen.
If somebody took the job of CFO at some company today, what would you advise them?
Number one is listen. Right. I think too often CFOs are there and they're viewed as the people who are there to say no. Right. I like to challenge our team to how can we find a creative way to say yes? How can we find solutions and ways to make things more efficient, not just forego them in lieu of something else? That can sometimes be hard for us. We're all naturally skeptics. That's what tends to attract people into the finance business. So how are you skeptical with a good bent towards it to helping people accomplish their goals?
Finding creative ways to say yes. If Paul Jacobson and his team can do that, GM will be well on the way to delivering on its grand vision of transformation. I'm David Westin. This is Bloomberg.